SpaceX is finally going public. If everything goes as planned, this could become the biggest IPO in history. For years, millions of investors have been waiting for one thing: the chance to own a piece of SpaceX. Now, that opportunity has finally arrived. At first, it sounds like an incredible investment. This is the company behind reusable rockets, Starlink, and Elon Musk's long-term vision of making humanity a multiplanetary species. For many people, buying SpaceX feels like buying a piece of the future. But the moment you look beyond the headlines, the story starts to change. The first surprise is the share allocation. Around 30% of the shares are reserved for retail investors. That's ordinary people like you and me. At first, that sounds generous, but here's the question. Why? SpaceX doesn't need retail investors. Large investment firms, hedge funds, and pension funds could easily buy the entire offering on their own. So why reserve such a large portion for the public? Then comes the second surprise. Public investors will receive voting rights. That sounds fair. If you invest in a company, you should have a say in how it's run, but don't celebrate just yet. Those voting rights come with very little real influence. We'll see why in a moment. Then there's one more detail that almost nobody is talking about. SpaceX didn't just choose Nasdaq. Shortly before the IPO, Nasdaq changed its listing rules. The timing wasn't a coincidence. Both Nasdaq and the New York Stock Exchange wanted the biggest IPO in history. Nasdaq moved first. SpaceX chose Nasdaq. So before a single share has even been sold, one question already stands out. Is this IPO really about raising money? Or is something much bigger happening behind the scenes? Because once you connect all the pieces, this stops looking like just another IPO. It becomes a story about control. And to understand that, we first need to understand what SpaceX has become over the last 2 decades. SpaceX was founded in 2002 with one goal: to make humanity a multiplanetary species. More than 20 years later, that goal hasn't changed. What has changed is the company itself. For more than 2 decades, SpaceX remained private. You couldn't buy its stock. Only Elon Musk, early investors, venture capital firms, and a handful of large funds owned a piece of the company. During that time, SpaceX transformed the space industry. It made reusable rockets a reality. It became one of NASA's most important partners. Then came Starlink. Today, millions of people rely on it every day. For many of them, it's the only reliable internet connection they have, and that's a big deal. Because Starlink isn't just another SpaceX project. It's the business that generates most of the company's revenue. In 2025, SpaceX generated around $18.7 billion in revenue. Then, in just the first 3 months of 2026, it brought in another $4.7 billion. Those are impressive numbers, but they don't tell the whole story. SpaceX isn't one business. It's several businesses operating under the same roof. There's the rocket business, Starlink, government and defense contracts, and then there's xAI. We'll come back to xAI later. For now, here's what matters. Some parts of SpaceX generate billions, others lose billions. When you invest in SpaceX, you don't get to choose. You own all of it. So here's the real question. If SpaceX already has private investors, billions in revenue and no shortage of funding, why go public now? Because raising money is only part of the story. The rest becomes much clearer once we look at who will actually control the company. Let's start with the good news. If you buy SpaceX stock, you'll get voting rights. That's how public companies usually work. You invest your money. You get a small voice in the company's future. Sounds fair. But here's what most headlines don't tell you. Not every vote carries the same weight. SpaceX uses something called a dual-class share structure. That simply means there are 2 types of shares. One type gives much more voting power than the other. This isn't unusual. Google has it, Meta has it, Snap has it. The idea is simple. Founders can raise money without giving up control of the company they built. That makes sense. But SpaceX takes it much further. Elon Musk owns about 42% of the company, yet he controls nearly 80% of the voting power. How? Because his shares carry far more voting power than the shares sold to public investors. And that's the part many people miss. You'll own part of SpaceX, but you won't help control it. Even if millions of public investors disagree with Elon Musk, they won't be able to outvote him. In other words, his control is built into the system. It doesn't depend on public opinion. It doesn't depend on shareholder votes. And it doesn't disappear after the IPO. So, yes, you'll get a vote. Just don't expect that vote to change the direction of the company. Whether you see that as a good thing or a bad thing comes down to one question. Do you want to invest in Elon Musk's vision? Or do you want a real voice in the company? Because with SpaceX, those are not the same thing. And once you understand that, another question becomes even more important. If public investors have so little control, why does SpaceX want so many of them? By now, one thing is clear: public investors won't control SpaceX. So here's the next question. Why invite them in at all? SpaceX plans to raise around $75 billion. At that size, finding buyers isn't the challenge. The world's biggest investment firms could easily buy every available share. They have the money. They've done it before. So why reserve around 30% of the IPO for retail investors? At first, it looks generous, like SpaceX wants everyone to own a piece. But there may be another reason. Retail investors don't just buy stocks. They talk about them. They post about them. They defend them. And many of them hold their shares for years. That creates something money can't buy. Attention. We've seen this before. When Saudi Aramco went public, millions of ordinary investors rushed in, believing they were buying a once-in-a-lifetime opportunity. The excitement was real. The headlines were everywhere. But after the IPO, the stock traded below its offering price for years. That doesn't mean SpaceX will follow the same path. Every company is different. But it does remind us of something important. The biggest IPO doesn't always become the best investment. So maybe the real question isn't, why does SpaceX need retail investors? Because once millions of people own a stock, they don't just become shareholders. They become part of the story. And the story gets even more interesting when we look at another company that quietly became part of SpaceX, XAI. So far, we've talked about control. Now let's talk about risk. Earlier this year, SpaceX acquired XAI, Elon Musk's artificial intelligence company. At first, that sounds like a smart move. A rocket company with its own AI business sounds like the future. But there's another side to the story. Last year, XAI lost around $6.4 billion. Like many AI companies today, it's spending huge amounts of money while trying to grow as fast as possible. So where does that money come from? That's where SpaceX comes in. Rocket launches, Starlink subscriptions, government and defense contracts. These businesses generate billions in revenue. That money can help support parts of the company that aren't profitable yet. And that's important because when you buy SpaceX, you're not just investing in rockets. You're not just investing in Starlink. You're also investing in XAI, whether you plan to or not. There's another detail that's easy to miss. Before XAI became part of SpaceX, Tesla invested about $2 billion in the company. Many Tesla shareholders didn't want that investment, but it happened anyway. Then SpaceX acquired XAI. That means Tesla's investment became part of SpaceX before the IPO even began. Think about what that means. If Tesla shareholders couldn't stop money from moving into another Elon Musk company, what makes SpaceX investors think they'll have more control? The answer is simple. They won't, because the same person still controls the votes. That's why looking at SpaceX as a single company can be misleading. It's becoming part of a much bigger ecosystem. Money moves between companies, assets move between companies. Decisions in one business can affect another. That creates opportunities, but it also creates risks that every investor should understand. And once you see how connected these companies have become, the next part of the story starts to make a lot more sense. Because the biggest advantage of this IPO may not come from retail investors at all. It may come from the stock market itself. At this point, you might think the story is over. It isn't. Because there's one last piece almost nobody is talking about. Nasdaq. The moment SpaceX goes public, it automatically becomes part of the Nasdaq Composite Index. That's normal. But the real prize is the Nasdaq 100. That's where the biggest companies on the exchange are grouped together. And that's where billions of investment dollars are waiting. Why? Because hundreds of ETFs, pension funds, retirement accounts, and index funds track the Nasdaq 100. They don't choose stocks one by one. They simply follow the index. If a company joins the index, they have to buy it. No debate, no opinion, no emotions, just the rules. Normally, a newly listed company has to wait at least 3 months before it can join the Nasdaq 100. That waiting period gives the market time to decide what the company is really worth. It helps separate real value from excitement. But SpaceX didn't have to wait. Shortly before the IPO, Nasdaq introduced new fast-track listing rules. Instead of waiting months, a company could now qualify in 15 trading days. Then SpaceX chose Nasdaq. The timing caught a lot of attention. Nasdaq wanted the biggest IPO in history. SpaceX wanted faster access to the index. Both got what they wanted. And here's why that matters. Once SpaceX enters the Nasdaq 100, funds that track the index have to buy the stock. Not because they love SpaceX, not because they believe in Elon Musk, because that's simply how those funds work. That means millions of people could end up owning SpaceX without ever choosing it, through their pension, their retirement account, or an index fund they've owned for years. Some investors will buy SpaceX because they want to. Others will own it without even realizing it. And that's what makes this IPO different. It's not just about attracting investors. It's about becoming part of a system that keeps buying automatically. No matter who is running the company, no matter who controls the votes. And once you understand that, there's only one question left. Is SpaceX really the opportunity everyone believes it is? So where does all of this leave us? There's no question that SpaceX is one of the most impressive companies in the world. It transformed the space industry. It built the world's largest satellite internet network. And it continues to push technology further than almost anyone else. But a great company doesn't automatically make a great investment. Those are two different things. Before buying the stock, there are a few things every investor should understand. First, public shareholders won't control the company. Elon Musk will. That isn't hidden. It's built into the voting structure. Second, you're not just investing in rockets or Starlink. You're investing in an entire ecosystem. That includes businesses generating billions. And businesses still losing billions. Third, millions of people may end up owning SpaceX without ever making the decision themselves, not because they bought the stock, but because their pension, retirement account, or index fund bought it for them. None of these things automatically make SpaceX a bad investment. They simply change the way you should think about it. The biggest mistake any investor can make is buying a stock because everyone else is excited. Excitement can push prices higher, but it doesn't eliminate risk. At the end of the day, every investment comes down to one simple question. Do you understand what you're buying? If the answer is yes, then your decision is based on facts, not hype. And that's always a better place to start. If you enjoyed this video and want clear, simple explanations, make sure to subscribe. We don't just follow the headlines, we explain what they really mean. Thanks for watching, and we'll see you in the next one. This video is for educational and informational purposes only. Nothing in this video should be considered financial, investment, legal, or tax advice. Investing involves risk, and you should always do your own research or consult a qualified professional before making financial decisions.